Hi viewers, welcome to the Fund Analysis channel. I am Bijan, back with another video covering product comparison. Today in this video, we are going to compare 4 AMC products: ICICI All Season Bond Fund, SBI Dynamic Bond Fund, Kotak Dynamic Bond Fund, and Reliance Dynamic Bond Fund. Bond funds are considered to be safer than equity funds, with a lower rate of return than equity funds. Bond funds, in comparison to fixed deposit and recurring deposit, provide better return over a period of time, and it also protects the wealth. Like the equity, bond funds are exposed towards certain risks, and they are credit risk, interest risks, and foreign exchange risks if applicable. Let's see the investment details now. Within the bond funds, SBI Fund House is the largest and oldest one. The value of the assets for SBI is 1,08,333.43 crores, followed by ICICI at 27,912.57 crores, whereas Kotak and Reliance holds 7,365 and 9,720 crores respectively. Most of the bond funds, except Kotak, has been invested more than 95% of their value in the bond sector. Kotak invested with 84% of the fund value in debt, while the rest are on the cash or cash equivalents. Kotak and ICICI are relatively new fund, and they have been established in 2013 and 2015. SBI and Reliance has been performing in the market for a long time, since 2004. Reliance Dynamic Fund has a greater expense ratio, followed by SBI, which is 1.6%, followed by ICICI and Kotak, which is 1.3% and 1.08% respectively. Overall, from stability viewpoint, SBI scores higher, and it is followed by ICICI, Kotak, and Reliance. All the funds listed in this group has minimum investment amount as 5,000 rupees to start with, and if investor wants to invest more, he can do so with a lot of 1,000 rupees. Exit loads are different for different funds. SBI and ICICI charge 0.25% of the fund value if the investor wants to withdraw his money within a month of investment. Reliance charge 1% of the fund value if the investor decides to withdraw money within a month's time, while Kotak provides more flexibility by not imposing any exit load for the withdrawals. Hence, we will rate Kotak as 5-star, while SBI and ICICI rates to 4-star and Reliance at 3-star. Let's look at the fund performance from past historic trailing return. Trailing return provides the percentage return that fund has delivered as of today over last 1, 3, and 5 years. From 3-month to 1 year category, SBI has performed better than all of its peers. It is able to generate 5.36, 10.19, and 14.5% annualized return, while Reliance generated 3.74%, 8.08%, and 11.75% in return. Kotak has shown the next best return of 3.68%, 7.41%, and 12.77%, followed by ICICI. In 3 years category, Kotak performed better than SBI, ICICI, and Reliance by providing 8.47% return. SBI performed next best result of 8.28%. ICICI All Season Fund provided 7.89% at the same year category. In 5 years category, ICICI performed better than others, generating 9.98% return, and followed by SBI at 9.62%. Overall, SBI has performed really well, followed by Kotak Dynamic Fund in all of the time horizon. Now let's see the risk ratios. Kotak Dynamic Fund has the best risk ratio compared to four of its peers. It shows less volatility and risk as standard deviation and beta numbers, that is 3.18 and 1.64. ICICI Prudential shows the next best volatility and risk numbers, which are 3.92 and 0.95. If we look at the risk-free return indexes like Alpha and SHARP, Kotak is the best one on the books, that is 1.76 and 1.64. SBI shows the next best return ratios in the form of Alpha and SHARP ratio, and it is 0.68 and 1.21. In all four risk ratios, Reliance Fund shows the unfavorable numbers compared to other three peers. Hence, if I look at the risk and return factor together, I would rate Kotak as the best fund, followed by SBI Dynamic Fund and ICICI All Season Fund. Let's look at the portfolio spread for these four bond funds. SBI Dynamic has invested 79% in government bonds, 19% in corporate bonds, and 2% in cash equivalents. ICICI All Season Bond Fund has 73% invested in corporate, 19% in government, 5% in security, and 3% in cash or equivalent. Reliance Dynamic Fund has invested 87% in the government bonds, 10% in the corporate bonds, and 3% in the cash or cash equivalent. Kotak Fund has invested 44% in corporate, 39% in government papers, and 16% in cash or cash equivalent. If you see Kotak Dynamic Fund, it has actually more cash equivalents compared to its peers. SBI and Reliance have invested in 100% AAA bonds, which is maximum secure ratings, and credit risk is almost nil. The average credit quality is AAA for both of these funds. Kotak has investment of 84% in AAA rated bonds, while 16% is invested in AA rated bonds. The average credit quality is AAA for Kotak bond fund. ICICI All Season Bond Fund has 57% invested in AAA rated bonds, while 43% is invested in AA rated bonds. The average quality of credit is AA. SBI, Reliance, and Kotak score superior to ICICI in this front. Modified duration for bond indicates the interest rate sensitivity of a fund. High value of modified duration number shows that the fund is more sensitive to the interest rate changes. ICICI All Season Bond Fund has a better sensitivity to interest rate change. The number shows is 3.19. The SBI Bond Fund has a higher interest rate sensitivity, which is 6.54, making it a very volatile fund. The other two funds, Kotak and Reliance, scores 3.79 and 4.19. If we look all the aspects, Kotak Bond Fund scores 5 star, while Reliance scores 4 star, followed by ICICI as 3 star and SBI as 2 star. Let's look at our decision. Looking at the fund stability, investment options, risk versus return, and portfolio quality, Kotak Dynamic Bond Fund scores 5 star, and it is a good debt fund to invest on 1 to 3 years of horizon. SBI scores the second preferred option for invest in dynamic bond fund. ICICI become the third choice, followed by Reliance Dynamic Fund. With this, we are concluding our video for product comparison on 4 known debt mutual funds. Thanks for watching the video. If you like the video, please click on the thumbs up icon. Also, subscribe to the channel. Press the bell icon if you want to get notified when we release new product review videos. Share the video with friends. Please leave the feedback in comments. Also comment if you have any specific fund to be reviewed in the future videos. Thank you very much. Bye for now, and we'll see you in the next video.